Welcome back, Outfunners. Hope everybody's having a very wonderful, marvelous Wednesday, Hump Day Wednesday. Apologies for being a little late. I went to lunch with some former coworkers, and it took a little while getting our lunch out. Anyways, let's see what we got going on in the market. Yesterday was not on a live stream, kind of just taking care of some things yesterday, so back at it. If you pick a day to have a day off, well, not much kind of went on yesterday. It's kind of a flat day. A little bit of volatility there in the afternoon. Jerome Powell was speaking on some things, kind of leaning a little bit into the possibility of not having as many rate cuts or, interest rates or rates staying higher for longer. So kind of surprised the market hasn't sold off more, but obviously you see that we did have a little bit of a gap up today on the market, and we've sold down. We're currently negative by about 0.25%. A little bit of a bounce here over the past hour and 20 minutes. So we'll see if that's a big deal. The one question I would have right here on the market, right here, right now, and this is very important, is this is kind of where we bounced before, where we stopped, where we sold down Monday into Tuesday. And we tried to bounce there this morning, and we failed that. So are we coming to this spot, or roughly this area, and we're going to reject, go bearish? To me, I can make that case. I can make a very strong case to possibly say, hey, you know what, this is a pretty good spot to see the market reject off a retest and probably go lower. Does it maybe chop a little bit higher? Yeah, sure. I mean, it's not perfect. But I'd probably be a little bit more willing to be bearish at this level. But obviously, if you take out the high of today or yesterday, probably done with that move, right? Qs are down 0.75%. This is what you want to continue to see. If you are trying to be bearish on the market, you want to see the biggest heavyweights lead and push the market around. And if they are bearish, the market, SPY, will be bearish. So the Q's not having a great day. IWM currently down 0.2%. Not as bad of a sell down here this morning. A little bit more of a flatter day. Okay. All right. IWM doing all right. DIA actually currently positive by about 1.1%. So the DIA actually had a good day yesterday as well. You probably attribute that to a lot to UNH. I think I saw UNH at the end of the day yesterday. It was up over 5%. Wow. I mean, we can take a brief look at that. But yeah, DIA looking pretty good here on the intraday as far as, nice bounce here over the past hour and a half. Nice little pull down here. Doing better over the past 2 days than the Qs and SPY. Definitely. RSP, nice gap up. They sold down. So everything kind of sold down this morning. Nice bounce here over the past hour and a half on the RSP. All right. So, yeah, RSP's been hit multiple days now. You got 6 days red here in a row. Look where we came into. Kind of mentioned you break that 50, probably looking for that 100. That's exactly where we came into today, right here. This was some previous highs, right back over here from where we consolidated at the end of last year, the beginning of this year. We broke that. We went on a run. We have now come back to that level. That's also where the 100 moving average is. It makes sense. We're going to probably see the RSP at least chop around here for a little bit. I mean, it's kind of bouncing this spot here for about 2 days now. So RSP, probably not the best spot right here to be bearish. I'd probably be looking to be more neutral, if anything. See possibly how it sets up to maybe be bearish if we get like a nice look here over the next couple of trading days as these moving averages come down. Yeah, I mean, you're gonna have to kind of see, because we just kind of went breaking through many levels, many trends here over the past week and a half. So yeah, just see how it looks, over the next couple trading sessions. The DIA is actually consolidating under the 100 moving average. That's concerning. That is concerning, but as we've talked about before, even under that 100 moving average, you have these previous highs back over here, which is basically where it's been bouncing the past 3 days. You also have these lows where it might find support, and you got this level down here around 370, which is the previous all-time high. DIA, yeah, not shocked it's having a hard time just continuing to break down under the 100 moving average. It might continue it later, but I mean, you can see it's not just continuing to drop off. IWM under that 100. Ah, man, makes sense. It probably just makes a move to 200. Yeah, I mean, it makes a lot of sense. I mean, this is well under that 100 moving average. It's kind of like halfway between that 100, 200 moving average area. So probably makes sense that it breaks down. Qs have almost gotten to that 100. Look at that breakdown today, that move lower. Obviously, we know how bad Monday was. Rest day yesterday, kind of retest, a little bit higher. Even a little bit of a higher gap up today, retest, and then just kind of sold off. Be curious to see how we end here on the Qs today, because if we end towards the lower end of the day, I can just see us quickly selling down, kissing that 100 moving average tomorrow. And that would make a lot of sense, honestly. I'm going to get rid of this alert level on both the SPY and the Qs, but yeah, we don't need to have those anymore. We're definitely broke trends here. SPY under that 50, hasn't quite got to that 100. Definitely halfway. It got about halfway between that 50 and that 100. The thing you gotta really like here on generally on the markets, the Qs are probably closer to that 100 than the SPY is, and you can go both ways as far as the bulls or the bears on that. The Qs, if they bounce off the 100, well, that will help lift up the market, and so the bulls can say, okay, I mean that's gonna be bullish if you bounce off the 100, get into the 100, that'd be bullish. So I could get that, I can make that case. The other thing is, well, the SPY isn't getting to its 100, so if the Qs actually break its 100, then you're going to have a really big issue, because the Qs will then drag down everything else as it looks to move and break down even more. Yeah, it'll be curious to see which way that goes. I would be cautious as you approach this 100 moving average on the Qs, because it definitely probably will impact like everything else, right? Yeah, that's just kind of what I got on that. I mean, SPY, just not as close there. It's just kind of middle of no man's land. So I would say until we come down probably at least 480, I would imagine you're probably just looking for good consolidations and continued breakdowns. That's in my opinion. I would just be careful of any major kind of maybe pivot levels that we've kind of had before, or moving averages that you're going to come into. Other than that, we'll just keep looking around the market. SPY though, yeah, I mean, there you go. I mean, the yields have kind of broke, the trend of the market, and now you're just getting market technicals that are just breaking down, and so you're just going to continue to probably see a little bit of bearishness going to continue to come into the marketplace. The VIX, also, there's a lot of other risk out there, geopolitical stuff like that. VIX though, not doing too much. Just kind of hanging out. I mean, we're continuing to break down and sell down today. And think about this: the Qs are down 1%. The VIX doesn't even recognize that the market's down. I mean, the VIX is down a little bit, but the Qs is down like 1% right now. So, yeah, it's kind of what we were talking about last week or maybe Monday. You could definitely see the market as it breaks down and continue to sell down. The VIX not just spike. So, I mean, I wouldn't be shocked to see the market continue to do what it's doing today, or the VIX is kind of just hanging out, not really doing a whole lot, maybe pulling back a little bit, but you're still seeing the market pull down, break down. So, not shocked, but that won't happen too much longer, right? It won't. You start to break some major price levels on the market, and that VIX will really start to spike up, and that'll be the time to not be bearish. What do we got here on the DXY? So, okay. So the end of last week, we were talking about these huge moves, how deviated away from the moving average was. I was like, hey, you know what? Just be patient. here on the DXY. The DXY is one, if you just look back through its history, it really likes to ride at least the 10 EMA. Like, it doesn't deviate away from it too much. It really doesn't. So whenever it's deviated away that much, it's just good to just, lock in some profits, reduce exposure if you do have more exposure here or anything like that, and just be patient. Just wait for that moving average to kind of come up. Wait for that pullback, even if it does go higher the next couple of days, which it did that Monday and Tuesday, right? And then just wait. Like, you'll get that snapback day, and there you go. We're getting a little bit of a snapback day today. Will we continue down a little bit tomorrow? Probably. I'd imagine we're probably in that pullback spot now. Maybe we don't continue down. Maybe we just kind of chop sideways. But I would see what this looks like tomorrow. If we do pull down a little bit more tomorrow, I'd be a little bit more willing to be bullish if we can pull back a little bit more tomorrow. Yeah, just a little bit more tomorrow. I would like that a little bit more to start getting back bullish into that. GLD, my gosh, gold, GLD Gold Trust. My goodness, man, this thing. It's just consolidating sideways. This looks so good, man. I'm gonna look at an hourly time frame. Okay, yeah, we got the breakdown. We got a little bit of rollover. So this is looking at an hourly time frame. I'd be curious to see what this looks like here in the next couple of days. Are we consolidating sideways here and we're going to get pushed up by the moving averages, or are we doing a little hangman type action where we broke down, did a little hangman, and we'll, roll over, which will set up for an actual pullback. I'd be curious to see how this develops here the next day. That's what I'll say. See what that looks like tomorrow. All right. So 10-year yield. 10-year yield. Pulling back quite substantially today. And this is kind of what I meant just a little bit ago when I said when you break the market technicals, and then the market starts to move, breaking certain momentum levels and stuff like that. Look, yields are down. Yields are down almost 2%, down 1.9% here on the 10-year. So, yeah, I mean, it's just, if prevailing wisdom were to say, like, if yields were down, then the market should be up, or anything like that, vice versa. Then why isn't the market up? That's because we kind of just been breaking things down right here recently. So, yeah, I mean, this doesn't really change anything. We did have a bearish engulfing last Thursday, Friday over Thursday. Today we're gonna have one Wednesday over Tuesday. And I mean, it doesn't really mean anything because we continue to go higher, Monday, Tuesday. So, yeah, nice little pullback. That's all. I mean, I wouldn't say anything crazy about it. Yeah, I wouldn't say anything crazy about it. There you go. Let's take a look at 30-year, longer term. This might be a little bit more telling here because if I can spot with my little eye. Yeah, we had this little channel. I mean, it's kind of like a hypothetical channel, right? But you can see that we kind of did breach the upper ends of these little two highs, these higher highs. We did breach the upper end of that, so maybe it makes sense that we see yields. I'm not going to say go down, but maybe slightly underperform. Maybe just go sideways, consolidate, push higher later on, that kind of stuff. If we do break the high here on the 30-year, anytime the rest of this month, if we let me see if I can use this super cool marker tool. If we just kind of like base in here and then start to push up like this, the market will get absolutely destroyed. The stock market, that is. So if we do something like that, that would not be good. If we just kind of like come down maybe another day or two, nothing crazy, no more huge drops like we are today, but just kind of consolidate sideways, and then towards maybe the last week and a half of April, really start to run up on yields. that would be really bad for the stock market. Because at that point in time, yields would be, I think yields would be really climbing if that would be to happen. So this is what I would watch. Like if you're looking for a really aggressive opportunity on the stock market, that's what I would look for. Is if yields just kind of consolidate in here for like the next week, and then they start to push higher here the last week of April, which let me see calendar. So yeah, up until maybe next week, maybe next Tuesday, Wednesday, and then maybe yeah, maybe then the next 4 or 5 trading days after that, we start to really run up as we go into the end of April, maybe in the beginning of May, because you know we got this half week, and then we got next week's a full week of April, and then the week after that's gonna be a half week of first two trading days will be April, and then 3 trading days will be May. So if that is kind of happening by that May 3rd, that could be a really great bearish opportunity if you start to see yields set up that way. So that'll be interesting. See if we see that on the 30-year. The 2-year. Well, we had that nice move last week. It's just mostly been consolidating sideways. I got nothing. Just consolidating. If we break this level here from this lower wick back on Friday, we might just come down, retesting some of these highs. But if we rally towards the end of the day on yields and close a little bit higher, I mean, we might just continue to drop sideways. I think the worst thing for the market right now would be yields chop sideways here over the next like 5 days. I think that like 3 to 5 days, if we get some sideways chop on yields, that would be really, really bad for the stock market, because that would set up for them to push really high as we go into the end part of April. Anyways, 10-2 inversion. Not really too much going on here. Didn't really do too much yesterday. Pulling back a little bit today. Kind of still has a little bit of this starting this upward trend here over the past couple of weeks, but not really. It's kind of sideways consolidating down there, basing. HYG did wind up moving all the way down to that 200 kind of yesterday. All right. Other than that, not really too much going on right now. I'd be just hanging out. Let's take a look a little bit more longer term. What are we doing here on the HYG? So HYG. So yeah, we had that huge breakdown, in 22, 23, just kind of choppy a lot, except until we got to the end, we kind of bounced up. Yeah, we got this resistance level here. That was really more from like last year, like this high that I put it on. But yeah, you can see we had the lower wick kind of coming out, or lower kind of pivot level when we came down to that spot. So, Did we just retest into that level for like 4 months, and then now we're breaking down again? The other thing is we got these highs from when we kind of consolidated here. Let me just put another one because I want to delete this. Got these highs. I mean, that's kind of where we are right now. So right here is a pretty good spot for the HYG to figure out, like, are we going to bounce, or is this the retest and we're going to bounce, or did we retest, at the end of last year and now we're going to break down? Be curious to see which way that kind of goes. But yeah, if we get below that 200 moving average, most likely we're just going to break down. LQD continued to break down yesterday, kind of bounce in here. Okay. Got nothing. I mean, it makes perfect sense that maybe we do retest a little bit higher as these moving averages are coming down, breaking below that 200 SMA. Pretty important. Kind of retested in that 100 weekly SMA. You kind of see that we kind of just rode that down, then we're breaking that down. Yeah, I mean, it doesn't look good. How about that TLT? Yeah, TLT. So we broke the lower end of this channel. Kind of mentioned this previous time period that we kind of did that initially before. We went sideways then, or kind of bounced back up into the channel, went sideways for a few days, and then we rapidly broke down the bottom into that channel. So I'd be curious to see if that happens again. And that would kind of coincide with us consolidating, maybe on yields at our current yield level, right? Maybe we consolidate here, and then we push up as we go into the end of May on yields. And if that happens, that's going to be pandemonium on the stock market. So yeah, we'll see if that happens. All right, take a look at the sector rotation for the day. How are the different sectors kind of doing out there? Tech, XLK, see underperforming a pretty good amount. Makes perfect sense. The Qs are down pretty good amount. Industrials kind of underperforming there. All right. Discretionaries, everything else is outperforming on the day. Discretionaries, real estate, healthcare, energies, communications, staples, materials, financials, and look at utilities. Utilities. You tell me people aren't getting defensive. The market was selling down, the utilities started to rise. So yeah, people are starting to recognize it. Yeah, maybe we should reallocate some capital here. Taking a look at intraday, yeah, you can see that huge separation the utilities had kind of mid-morning into our current timeline here. Real estate also outperforming pretty good there. Financials, energies, staples, materials, communications, discretionaries, and healthcare just barely outperforming there. Industrials barely underperforming. Yeah, tech, man. The tech's gotten hit throughout the day.